Hey everyone, this is Jeff. I'm truly grateful that you're here today, and I want to welcome you to Stress Free Investing, also known as the world of private lending. I don't believe it's an accident that you're joining us today. I know how full life can be, and the fact that many of you are at work. Understanding that you chose to spend this time with us tells me you're being thoughtful and intentional about using the time God has entrusted to you. Today's presentation is to provide insights into how you can be more fruitful and multiply your resources. It's about helping you explore an alternative way to steward your money, one that aligns with wisdom, simplicity, and peace. If you've ever felt uneasy about the constant ups and downs of the market, if you've wondered whether there's a more stable, understandable way to put your savings or retirement funds to work, you're in the right place. I'll share just a little of my story, not to impress you, but to give you some context. Like many people, my real estate journey didn't begin with a big vision or strategy. It started with a simple decision back in the mid 90s, buying a home for our family. And over time, as life changed, that home became a rental. Then later, we've added others and then another. So looking back now, I can clearly see God's hand guiding each step. What felt like ordinary decisions at the time slowly became a way to provide stability, not just for our family, but for the families who lived in those homes. More recently, I partnered with a good friend and experienced investor on my first fix and flip project. I learned something that deeply changed how I view investing. That project didn't happen because of a bank, it happened because people, friends, church family, and trusted relationships came alongside of us to make this happen. Private money, as I've come to understand it, isn't about chasing high returns or taking advantage of others. It's about relationships. It's about allowing your money to be a tool, one that helps restore homes, support families, and create outcomes where everyone involved is blessed. For many people, private money offers a way to earn consistent returns without the stress of managing properties or the unpredictability of Wall Street, while knowing their capital is being used for something tangible and meaningful. That's what we want to walk through with you today. And help guide this conversation, I'm honored to be joined by somebody who has modeled what it looks like to teach private money with integrity and a servant's heart, my friend and mentor, Jay Conner, known as the Private Money Authority. Jay has helped countless people learn how to invest with clarity, confidence, and peace of mind, and always with a focus on relationships over transactions. Today, our goal is simple: to educate you, to serve you well, and to give you the information you need to prayerfully decide whether private money is something God may be inviting you to explore. So let's get started. Jay, thanks so much for joining us today. Please take time to introduce yourself and to lead us into how we serve others.
That's fantastic, Jeff. Thank you so much for inviting me to come along and share with you and your connections, your relationships here that are on this webinar, what private money and private lending is all about. Just a little bit about my background and how it is I'm qualified to talk about private money and private lending, because all know Jeff, but odds are none of you know Jay Conner. Jeff and I started working together a few months ago, and I just love the integrity that Jeff has and the character that he has, that he displays. So my story in a nutshell, very, very quickly, is my wife, Carol Joy, and I, we started investing in single family houses here in Eastern North Carolina all the way back in 2003. And we flipped and rehabbed over 500 houses, so we got quite a bit of experience. Well, the first 6 years that we were in this business, from 2003 to 2009, the only thing I knew to do to get my deals funded was go to the local bank or a mortgage company, get lines of credit, and borrow institutional money, just traditional lending. And that worked out okay until January of 2009, when everything changed. I thought I still had a line of credit at the bank. I called up my banker. I had 2 houses under contract to purchase, looking to use the line of credit that I had at the local bank, and I learned that the line of credit had been closed with no notice to me. And I told my banker, I said, "What's going on? Made my payments on time for 6 years, got a great credit score. We've done a lot of deals together." And he reminded me there was a global financial crisis going on. And so I knew I had to find a better and quicker way to fund my deals. Well, my definition of coincidence is God's way of staying anonymous. In less than 2 weeks, I learned about this world of private money and private lending and how it is just a simple one-on-one transaction between ordinary people that have got either investment capital or retirement funds. I've got a lot of private lenders that are using both, just liquid investment capital and retirement funds, and they're just looking to get a higher rate of return safely and securely, backed by real estate, very conservative lending, and to make a bunch more money than you can by putting the money in a local certificate of deposit at the local bank or etc. And so Carol Joy and we've got 47 private lenders that have done business with us. Every one of them, 100% of them, have received every penny of interest that was promised in the promissory note. And we don't borrow unsecured funds. Everything that we do in this world is called asset-backed lending or asset-backed loans. You're not just getting a promissory note to lend money to Jeff's company. You're getting the same protection as what the local bank would get, the mortgage and all that stuff. And we'll go over that more in just a little bit. And we do promise you, we know your time is very, very valuable. We'll probably have you all wrapped up with this initial introduction to this world of private money and private lending within the next 30 minutes or so. So this is a great time to be investing in real estate. And as a private lender doing business with Jeff Jackson's company and him, it's a great way to be investing in real estate, but it's totally passive. You don't have to go out and negotiate deals, find deals, spend money on marketing, like Jeff does. You don't have to oversee rehab projects. Jeff and his team handles all that. All you do is invest the funds, and then you sit back and watch your money grow. So it's a great time to be investing in real estate because Jeff and I and the other members of our community, we have many, many multiple ways to locate motivated sellers of single-family houses that are wanting to sell their house. Most of the time, we don't even find it in the multiple listing service. And so we've got a lot of marketing methods, to find these properties. All right, so as I said, right now is a great time to be investing in real estate. And here's a couple of examples. We got over 500 examples, but here's a couple of examples with, our average profits now on these single family houses are over $80,000. Here's a property on Anneal Road, profited $80,000. This was all funded with private money. Here's a house on Stink Point Road, profited over $77,000. And this was all funded with private money as well. The reason we want to show you these examples is not to brag, but to show you with these kinds of profits, that's why Jeff is able to pay the private lenders, such as yourself, such high rates of return safely and securely. So Jeff, just to make sure everybody understands who's a private lender, let me turn it back over to you.
Thank you, Jay. That's a very good question. So what does it mean to actually be a private money lender? At its core, a private money lender is just an everyday person, someone like you or me who chooses to loan money from assets they already have. And this could be savings, liquid funds, or even retirement accounts like a 401k or an IRA. Nothing exotic or complicated about it. In fact, right now, I myself am a private money lender to others. We're on both sides of this equation, what helps us to be very intentional about how we structure these relationships. One thing we want to make very clear is that private lending is not a partnership. You're not signing up to run a business. You're not sharing in day-to-day decisions. Instead, our company purchases the property, the deed goes into our company's name, and you step into the role of the lender. In many ways, you're treated just like the bank would be. Your loan is tied to a specific property, protected with title insurance and a recorded mortgage. That structure is designed to provide clarity, transparency, and peace of mind. From a stewardship perspective, this means you know exactly where your money is going, what it's secured by, and what return you can expect. Private money lending offers something many people are looking for: a known, reliable, predictable rate of return without middlemen, without market swings, and without complexity. It is a one on one transaction built on trust, clarity, and proper protections, allowing your money to work in a way that is both practical and purposeful.
Beautiful, Jeff. Now let's answer this question. Why would you be interested in doing business with Jeff as a private lender? Well, here are 4 big reasons. Number one, you're going to earn a whole lot more money than you normally would with traditional sources. That normally gets everybody's attention. What's the return? Secondly, there's no volatility in the value of your investment. So what we're doing here is we're contrasting this opportunity with investing in the stock market. If you invest in the stock market, first of all, you already lost money because you had to pay commissions, you had to pay management fees, etc. Well, there's none of that with this opportunity. There's no volatility in the value of your investment. When you invest in the stock market or mutual funds, the value of your investment can be worth more or less that afternoon, tomorrow. But in this opportunity, it's like putting your money in a CD, a certificate of deposit at the bank. There's the value, that's your principal investment. That's your principal loan amount. And you know exactly what the return is going to be. It doesn't matter if the projected profit on that particular deal goes up or goes down, doesn't matter. You know exactly what your return is going to be on that investment. And Jeff and I will be going over that here in just a moment. Thirdly, why would you be interested? We have in this program an opportunity, a way you can get your investment back in case you have an emergency come along and you need it back earlier and sooner than the length of the note and the term. And then fourthly, as I mentioned earlier, your investment is secure and it is safe. How's it secure? Well, it's backed by the real estate that Jeff is buying. He's not borrowing unsecured funds. In addition to that, it is safe because it is what we call a conservative loan to value. And we'll go over exactly what that is as well in the next few minutes. Now, how is it that Jeff can pay such high rates of return that we're going to tell you about here in a moment? Well, there's 4 reasons. Number one, Jeff, like myself, he's able to locate and buy properties at super discounted rates. We do a lot of Google marketing, direct mail, outbound calling, etc. Secondly, he can pay you a high rate of return because there's no middle person involved. There's no broker to pay. There's no brokerage to pay. There's no origination fee to pay because it's a direct transaction between you and Jeff. Thirdly, Jeff's able to sell at full appraisal price for 2 reasons, and that keeps the profits high. First of all, when it's in a hot market and there's low inventory, then we can put the house in the multiple listing service and get full appraisal price very, very quickly. If it's a slower market, we have another exit strategy, and that's called selling on lease purchase or rent to own. That's where we will sell the property to a lease purchase buyer. That means they don't qualify for a mortgage today, but we're going to help them qualify for a mortgage. So Jeff, like myself, will collect a large non-refundable lease option deposit. He will rent the home to them while they're getting ready for the mortgage, and the price, the option price that is set when that agreement starts, is at full appraisal price. Actually, we price them above the current appraisal price. And then fourthly, Jeff, like myself, is able to get properties occupied very, very quickly because of our exit strategies. That reduces the carrying costs, which increases the profit, which allows Jeff to pay you that high rate of return safely and securely. So that's 4 reasons how we're able to pay such high rates of return. But Jeff, the people here on the webinar might be asking, well, Jeff, why are you interested in doing business with private lenders versus just going to the local bank or to a hard money lender or to a mortgage company?
Thanks, Jay. Those are great questions, and I am excited to be able to talk about them. First off, I can close a deal much quicker with you as a private lender. So when we work with private lenders, we're able to close on properties way more quicker than we could be doing with a bank. Banks can take up to 60 days, maybe even longer. And sometimes that speed is not what the seller needs. So with speed, we're not talking about rushing around or cutting corners. It allows us to step in when a family needs a timely solution, when a property needs to be stabilized, or when the situation simply can't wait on traditional bank timelines. For you as a lender, that means that your money doesn't sit idle. It goes to work sooner on a clearly defined project. Also, I can do an unlimited number of deals with private lenders. Much like the bank who would like to cap us out and tell us that we can't borrow any more money, working with private lenders allows us to do more than one deal at a time. And that doesn't mean more risk, it means more opportunity. Each loan stands on its own, tied to a specific property with its own protections and terms. You're never stretched across multiple projects or asked to take on something you didn't agree to. It simply allows us to serve more people, restore more homes, while offering consistent opportunities to our lenders. Because of private lending, I can negotiate more profitable deals since we can move faster. Because we can move more quickly and decisively, we're often able to negotiate better purchase terms. That benefits everyone involved. It creates more margin in the deal, which allows an extra layer of protection for you as the lender and helps ensure the project stays healthy from start to finish. And from a stewardship perspective, this is about wisdom, making thoughtful decisions that protect capital and promote successful outcomes. At the end of the day, private lending allows us to work in a way that's relational, efficient, and grounded in trust, so your money can be used well and everyone involved can walk away blessed. So let's talk about where do private lenders typically get their funds. Most of them can use, I'm sure some of you have heard, or most of you have probably heard about these certificates of deposit, money market accounts, savings accounts, and liquid investment capital. But many lenders use sources that hadn't originally been considered, such as IRAs, 401ks, and other retirement funds, home equity lines of credit, portfolio or brokerage accounts, even whole life insurance policies. Each of these tools can be leveraged to grow your money securely, often with better consistency than traditional investment options. These are strategies we've personally used as lenders ourselves. Jay, will you help explain what a self-directed IRA is, as well as some of the less common methods of where investment funds are found?
Absolutely. I never heard of self-directed IRAs until 2009 when I was learning about private money. And a self-directed IRA company is approved by the IRS. And what the IRS allows you to do with no tax penalties, no tax consequences whatsoever, you can take an existing retirement account. Maybe it's a 401k that you have from a previous employer. Maybe you got a 401k with your current employer. And I even have a private lender that did not, their 401k, they had not retired from that company yet. And because they had been there so long, the company allowed them to move up to 50% of their 401k out with no kind of tax consequences. So anyway, any kind of retirement account you've got, maybe you've got a retirement account that's earning tax deferred money in the stock market and mutual funds. Doesn't matter where it is. Well, if you're not happy with the kind of returns that you're getting on your retirement money or some of it, you can move it with no tax consequences over to a self-directed IRA company. Now, we endorse and we recommend the self-directed IRA company called Inspira. Now, Colin Taylor, I've been doing business with Colin for probably 7 or 8 years now, and he's our go-to. He's with Inspira, and he helps our private lenders move their retirement funds over to Inspira. Normally takes 2 to 3 weeks to get funds moved over. You can move a portion of them, you can move all of it, doesn't matter. And it normally takes 2 to 3 weeks to get your account funded. Once it's funded, now you can use those retirement funds to invest in Jeff's deals. And the money that you earn, it's unlimited that you can earn per year. It's either going to be tax deferred or it's going to be tax free, depending on the type of retirement account that you have. So if you have retirement funds and you're not happy with the kind of returns that you're getting, then Jeff will get you introduced to Colin Taylor, and he can answer all your questions that you would have about this particular part of the opportunity. Another creative way that you might not have heard about how to find assets or liquidity to invest with Jeff, and that is using a HELOC, a home equity line of credit. Now, this is a really cool strategy because this is called leveraging an asset. It's also called arbitrage. So here's the way it works. If you own real estate, you can go to your local bank, open up a line of credit, an equity line of credit, using that asset, and then you tell Jeff, well, here's how much you've got in your line of credit. Now, you don't pull down any of that money until Jeff has got a deal for you to invest in and loan money out on. Well, Jeff's going to pay you more money per month on your return than you're going to pay your local bank per month. So guess what? You get to do what we call pocket the spread. You see, this is what the big banks do. Who owns the big buildings in all the downtown cities? The banks. Why are they so rich? Because they're not lending out their money, they're lending out other people's money. And so in this case, in using this strategy, you'd be lending out the bank's money, not your money. You'd be lending out the bank's money. And so you lend it to Jeff. He's going to pay you a higher return per month than you would pay the bank. You pocket the spread. And guess what? This has got what's called an infinite rate of return. An infinite rate of return. Here's why it is infinite. Because you can't calculate the return on money that's not your money. I mean, you're making money on the bank's money, which is exactly what the bank does. So if you have equity in real estate, you can talk more about this strategy with Jeff one-on-one. You can find out what kind of line of credit you can get leveraging your real estate asset, and then you can make money on the bank's money it's just a great strategy. So you can talk more about this with Jeff one-on-one if you have equity in real estate. Now, in addition to that, here's another arbitrage strategy. Here's another infinite rate of return. If you own stocks or mutual funds in the stock market, guess what you can do? You can get a line of credit. Now, all the main stock brokerages have this in place. Some of them call it a portfolio loan account. Some call it a portfolio revolving account. But you can use your stocks or your mutual funds as the asset to get a line of credit. And the interest rates on those are pretty low these days. And so all you do is you set that up. You let Jeff know how much you've got to invest using this strategy. And then here you have another infinite rate of return. Jeff's going to pay you a higher interest rate per month than you're paying out to your stock brokerage. You get to pocket the spread, and there you have another infinite rate of return. Jeff also mentioned whole life insurance policies. Same thing. If you have a whole life insurance policy, you can borrow against that policy. And those interest rates are super low. And it's another infinite rate of return. You pocket the spread. Jeff's going to pay you more per month than you're paying your insurance company. So if you have that in place, you can have more conversation with Jeff about that as well. Well, Jeff, we haven't spilled the beans yet and told your connections and your attendees here exactly how the opportunity works and what kind of rate of return they can get. So Jeff, I'm going to turn you over to that right now to give them the details.
Thank you very much, Jay. And this is where it gets really exciting. So let me walk you through our private lending program in a simple and straightforward way so you can clearly see how it's designed to protect you and to serve you well. So first off, let's talk about the interest rate. We've got these clearly defined and how they're going to be used. So for loans secured in the first position, and this means purchasing the property, we provide an interest rate of 8%. I don't know what you're currently earning on your retirement funds or your liquid capital, but hopefully if it's greater than 8%, good for you. If not, we would love to talk with you. For second position loans for renovation or rehabs, we increase that to 10%. So the reason we distinguish between the two is simple. For number one, transparency. Each position carries a different level of security, and the return reflects that difference in a fair and honest way. The second is built-in protection through equity. We are very disciplined about how much we evaluate opportunities. And also, like Jay had mentioned earlier, the loan to value. We never exceed 75% of the after repair value, and that's often called an ARV. That means there is equity in the deal from day one, and equity that acts as a buffer and helps protect your principal. So for instance, if there's a property that has an ARV of $200,000, the loan amount for both the purchase and the rehab would never exceed $150,000, leaving that $25,000 buffer in there for you to be able to make sure that there's room, in case life happens. And from a stewardship standpoint, this margin matters. It allows room, like I said, for real life while keeping your investment well secured. And third, the terms that fit your situation. Our investment terms typically range from 2 to 5 years. Lenders who invest liquid funds often prefer shorter terms, usually 2 years. While those lending from retirement accounts, they've already got their money in play, and those usually choose 5-year terms so their funds can continue working without interruption. There's no one-size-fits-all approach here. We structure terms in a way that aligns with your goals and your comfort level. Payments, that's great because you want your money back and your interest. You control how you're paid. As the lender, you choose how and when you receive your interest, quarterly or semi-annually. And that flexibility allows you to match the income to your personal needs, whether it's supplementing retirement income or simply creating predictable cash flows. Early withdrawals, we allow access in case of life events or emergencies, and there's no penalties for that either. If an unexpected need arises and you require your funds earlier than planned, we simply ask for a 90-day notice. And at that point, we'll either transition another lender into your position or, if needed, liquidate the property. Either way, your security and peace of mind remain the priority. So minimum return, even when projects move quickly, we want to make sure that we're taking care of everyone who works with us. Sometimes projects conclude faster than expected, and when that happens, we don't believe you should be penalized. If a deal wraps up early, such as a short-term flip, we guarantee a minimum of 6 months of interest. Alternatively, with your approval, we can roll your funds directly into another secured property so your money continues working without interruption. Everything about this program is designed with one goal in mind: to honor trust, protect capital, and provide a clear, steady return so you can steward your resources with confidence and peace. So, how are you protected? One of the most important questions that any wise steward should ask is that question: how is my investment protected? So let's walk through how we safeguard your funds starting at the closing. First, your loan is formally secured. At the closing, you received a recorded mortgage or deed of trust. This is the same legal protection a traditional bank would require, and your loan is documented, recorded, and tied directly to the property. Second, and you really have legal rights. In an unlikely event that we fail to make payments as agreed, the law is clear. You have the right to the property and its equity. That structure exists to protect you, not just in theory, but in practice. And also, you're named on the title policy. Your name is included on the title insurance policy, ensuring your position is recognized and protected from day one. And also, you're also named on the hazard insurance policy. That means if something unexpected happens, such as a fire or major loss, your interest is fully accounted for. If an insurance claim is ever made, The check is issued jointly to you and our company, and that ensures funds are handled responsibly and repairs or resolutions happen with your involvement and protection in mind. Everything about this process is intentional. We believe trust should be supported by structure and faith should be accompanied by wisdom. That's why we design every closing to provide private lenders with the highest level of transparency, protection, and peace of mind possible. So let's talk about market conditions. As you are aware, markets can change. So I'm sure everybody might be thinking, well, what happens if the market changes or a home doesn't sell right away? So that's a wise question and one we take seriously. And as you've seen earlier in the presentation, we planned for that on the front end so market shifts don't put your investment at risk. First, we buy with margin. When we were talking that we significantly have a discount, often 30 to 40 cents on the dollar, that margin isn't about chasing profits, it's about building protection into the deal from day one. And by buying well below market value, we create room for real world changes while keeping your principal secure. And also, the buyers of these homes, the families that we are selling to aren't price shoppers. They're the ones we serve are focused on stability and home ownership. And also, they're looking for a great place to live, raise a family, and put down roots. That makes demand more resilient even when broader market conditions soften. And third, your loan remains well protected. Your investment is secured by that low loan to value ratio that we had talked about, 75%, which acts as a strong safety buffer. So even if we had to reduce the price significantly, there would still be enough equity in the property to ensure you would receive all of your principal. This approach reflects how we think about stewardship, anticipating challenges, building in margin, and making decisions that protect everyone involved, especially those who have trusted us with their capital. That's how we approach the market, not with fear, but with preparation and wisdom. So let's talk a little bit about the next slide, Jay. Where are the private money lenders send their funds? And it is certainly not to us, the persons who are buying the property. So that's a wise question, and we want to make sure that you're fully aware of where those funds go. They're sent directly to the real estate attorney's trust account. They do not come to us personally, and they're not deposited into a company operating account. This is intentional because using a licensed real estate attorney's trust account, your funds are handled in a professional, regulated environment, just as they would be in a traditional bank closing. Everything is accounted for. You never hand funds directly to the real estate investor. That's not something that we do. Everything flows through the closing process with proper documentation, oversight, and accountability. And from a stewardship perspective, this matters. It removes ambiguity, protects all the parties, and ensures that your money is used only for its intended purpose at the closing of a specific identified property. The structure reflects how we believe trust should be honored, again, with transparency, order, and safeguards in place so you can move forward with confidence and peace. And one of the questions that the lenders always seem to be concerned about is, are there any additional costs that would come to a lender? And a very simple question is going to be answered with no. And it's very practical and very wise. So as a private lender, you do not pay any closing costs, legal fees, or attorney expenses. We cover all the closing costs. That includes the real estate attorney, documentation, and the proper recording for your protections. And again, this is intentional. Our belief is that you are trusting us with your capital. Your funds should go to work for you and not be reduced by fees or administrative expenses. Again, from a stewardship standpoint, this keeps things clean and straightforward. You know exactly how much you're lending, exactly how it's secured, and exactly what return you can expect without surprises. It's one more way we work to honor trust, remove friction, and ensure this relationship remains simple, transparent, and fair. Jay, can you help everyone understand the private lender documents?
Sure. And so with every transaction and real estate deal that you do with Jeff and his company, here are the documents. So first of all, Jeff is going to either have an appraisal or he's going to have a comparative market analysis from his realtor that shows the after repaired value. He's going to have that before he even makes an offer on a property, because he's got to know that information to make sure that the numbers make sense. So the documents that you receive are the promissory note, which lays out the terms of the transaction. Who's the lender? That's you. Who's the borrower? That's Jeff's company. The principal loan amount, the interest rate, the length of the note, the frequency of payments, the 90-day call option in case you have an emergency come up, and etc. And then, as Jeff mentioned, depending on where the investment takes place, you're going to receive either a deed of trust or a mortgage. That is what's collateralizing that promissory note and gives you the security. Jeff just mentioned you're named as the mortgagee on the insurance policy. So if there is a claim against that hazard policy, the insurance company would make that check payable not only to Jeff's company, but to you as well, which means you'd have to sign off on that check. That gives you another layer of protection. And Jeff did mention you're named on the title policy as an additional insured in case there's any title issues down the road. Jeff and his company does not prepare the closing documents. Jeff's real estate attorney prepares the closing documents to make sure everybody is protected. Back to you, Jeff, on a range of investment.
All right, Jay, thank you very much. Now, what kind of properties do we invest in? And we intentionally focus on what we like to call bread and butter homes. These are solid, everyday houses, the kinds of homes that are well suited for first-time buyers, growing families, and those who are ready to downsize into something more manageable. In our area, and we're going to call Central Kentucky, Southern Indiana, our area for today, in our region, this typically means homes that are in the $125,000 to $350,000 price range. We focus here for a reason. These homes tend to consistently be in demand regardless of market cycles because they meet real housing needs for real people. And how your capital is used depends on the stage of the project. Like I mentioned before, for the purchase of the properties, we use larger loan amounts secured directly against the home being acquired. For the rehab phase, we usually use smaller target amounts to fund the improvements, repairs that help restore the home and make it safe, functional, and welcoming to the next family. This approach allows us to match the right amount of capital to the right purpose without overextending, without speculation, and always with protection in place for the lender. Again, from stewardship, which is the key of this whole presentation, this creates balance. Homes that serve families well, projects that stay well within clear parameters, and investments that remain grounded, practical, and secure. So the amounts that we're talking about could be up to $100,000, could be used for rehabbing projects, and those for larger amounts normally are reserved for over $100,000 so that we can make sure that we can move quickly and purchase those properties. Next, how do we move forward? All right. If after seeing this, you feel this may be something that's worth exploring, the next steps are simple and pressure-free. First, you decide what feels right to you. You start by letting us know how much you're comfortable investing. There's no obligation and no expectation, just a conversation focused on what aligns with your goals and your comfort level. You remain in control at every step. Second, we do the work of finding the right opportunity. Once we find your parameters, we go find a deal that fits this one and aligns with your amount, your desired term, and our disciplined lending guidelines. You're not out searching, negotiating, or managing anything. Your role stays simple and clearly defined: passive investing. Third, we handle the closing professionally. Like Jay has said, we always use a closing attorney when a suitable property is identified and you choose to move forward. So everything is handled through proper legal channels with full documentation, transparency, and the protections we've already discussed, so you can move forward with confidence and peace. This process is designed to be relational, respectful, and straightforward, allowing you to steward your resources wisely without complexity or stress. So I'll be following up with everyone on the call today to ask what you liked, you didn't like, and what we can do to improve regarding the webinar. And if this is something that makes sense for you and you're ready to take the next step, or you know someone who would be blessed by this, we will set up a date and get back in touch with you.
I don't see any other questions coming in right here, Jeff. And Jeff, this was fantastic. What an amazing presentation on your part. And thank you again, Jeff, for inviting me to co-present this webinar with you.
Jay, we really appreciate you taking the time out of your busy schedule to be here with us. I know with your credibility and your worth of experience there, it has been beneficial for everybody to hear from you. So again, thank you so much for being here and helping guide this conversation.
You're certainly welcome, Jeff. And another big thank you to all of you for taking time to be here during this presentation with Jeff and myself. And I'll sign off by saying this. I'm wishing all of you a very profitable future by becoming Jeff Jackson's next private lender. I look forward to all of you having that one-on-one conversation with Jeff and exploring how you all can put together with Jeff win-win scenarios and deals. Have a great rest of your day, and bye for now.
All right. Thank you, everyone, for joining today. As again, I stated, I'll reach out to you and just get your feedback on the webinar. Thank you so much for taking the time, especially if you're out working today, to join us. And otherwise, this concludes the webinar. Take care and God bless.